Shares of government-owned banks could be in high demand today after a report that foreign direct investment or FDI rules could be tweaked for the sector. Currently, FDI in the public sector banks is capped at 20%, and reports say this could be more than doubled to 49% to help recapitalise banks and bring them more in line with their private sector peers. That's where foreign ownership is of up to 74%, and that's what's allowed in the private sector names. The question is, will the new rules actually spur foreign buying in these banks? Despite the current 20% cap, the highest FI holding currently is in Canara Bank, and that's at just under 12%. The country's largest bank, SBI, has foreign holdings of under 10%, and around 60% of the 12 listed PSBs have FI holdings of below 5%. Let's go across to Hemendra Hazari, who's joining us and an expert on the banking industry. Hemendra, a whole set of reforms have been anticipated when it comes to the PSU banks. This is the latest in the slew of reform measures that we've seen. What are you making of this announcement? And given the numbers that I just kind of rolled out in terms of the current interest by FPIs in private sector banks? Okay,
there
Hemendra,
is no
thanks.
Economic rationale for this move.
Okay.
Because, as you rightly pointed out, the foreign interest in the public sector banks at the moment is very low, and it is below 10% in most banks, even State Bank of India. Therefore, increasing the limit from 20 to 49% should not move the needle at all.
Okay.
However, the issue may be because of a political reason that the government is testing the waters, whether they would like to give majority control in PSU banks, which is a politically loaded issue. So they just may want to test the waters to see how the political opposition is to this raising of 20 to 49%. Because even today, strategic investors in a PSU bank cannot hold more than 10%, so they won't have any management control. So it is imperative that at least for them, that they have 51% control and a much higher stake in the voting rights.
Ramesh, let me come to you on this first. A big move to allow further foreign investment in public sector banks. But as we just heard from Hemendra Hazari, his view is that there's really no precedent for this move, and it won't lead to any real shift or change or interest in these banks. What's your kind of take on this latest reform?
Yeah, good morning. I mean, this is a welcome move. And the way these public sector banks were being managed was more of a, public sector in nature and private sector participation into the public sector bank in a bigger way, where management control and positions by private people into moving into the MD and CEO position of these banks would be more aggressive in nature. What we have seen in the texture of all the PSU banks earlier was the NPA problem, which got resolved down there, sitting on the best of the asset quality. With a very good capital adequacy ratio in place. The only thing which is missing is the aggression on the personal loan unsecured lending portion of the business, which others have been doing quite effectively with the same or a better kind of an asset quality. So I think this financial sector anyways is attracting a lot of foreign capital into the Indian space, and India economy is poised to grow on a very speedy trajectory compared to anybody else in the globe. So this will boost the valuation multiples of most of these banks. Now they will be marked at almost at par with the private sector banking valuation multiples. Almost 50%, 40% discount is there. So valuation-wise, catch-up will be there, good for shareholders. At the same time, businesses will be more aggressive, more competition, and good for us consumers, because now we will have a much better deal whether we are dealing with private or public sector banks. So I think it's a very good move by the government.
If you like the video, do like, comment, share and subscribe.